Today we are peeling back the pages of history to uncover a tale of relentless ambition, shrewd decision-making, and financial genius. We are delving into the journey of Warren Buffett, the Oracle of Omaha, and how he made his first million, a milestone that marked the beginning of an empire. This isn't just a story about money, it's a masterclass in wealth creation from one of the greatest investors of our time. Buckle up as we embark on this extraordinary journey. The early years, sowing the seeds of success. In the vast landscape of financial legends, the story of Warren Buffett's ascent to billionaire status stands tall, a beacon of inspiration and ingenuity. But every towering oak tree once started as a tiny acorn, and Buffett's journey to his first million is a compelling tale of how the seeds of success are sown in the early years. Born during the Great Depression, a time rife with economic hardship, Buffett's childhood was a crucible that forged his financial acumen. From a young age, Buffett exhibited an entrepreneurial spirit that was both rare and precocious. At just 6 years old, he purchased 6 packs of Coca-Cola for 25 cents and sold each can for a nickel, netting a 5 cents profit. Even as a child, Buffett understood the fundamental principles of business: buy low, sell high. He realized the value of good investment, but it wasn't just his business ventures that set young Buffett apart. It was his voracious appetite for financial knowledge. At just 7, he was engrossed in books like 1,000 Ways to Make $1,000, sponging up the wisdom that would later define his investment strategies. The thirst for knowledge was the cornerstone of his early years, laying the groundwork for his future successes. Buffett's first foray into the stock market came at the tender age of 11, when he bought 3 shares of Citi's Service Preferred at $38 per share. The stock dropped shortly after, but rather than panic, Buffett held on, selling at a small profit. His early experience was a practical lesson in patience and market fluctuations, the two themes that would become hallmarks of his investment style. Buffett's education continued at the University of Nebraska and later at Columbia Business School under the tutelage of Benjamin Graham, the father of value investing. Graham's teachings, emphasizing the intrinsic value of a company over market speculation, resonated deeply with Buffett and profoundly influenced his investment philosophy. Buffett's early years were a tapestry woven with threads of entrepreneurship, relentless pursuit of knowledge, and a keen understanding of the value. Each of these elements played a crucial role in his journey to his first million and beyond. They were the seeds of success that he meticulously nurtured, setting him on a path to becoming one of the greatest investors of all time. In essence, Buffett's early journey is a testament to the fact that the foundations of great wealth are often laid early in life. It's a journey that highlights the importance of cultivating a deep understanding of business and finance, the resilience to withstand market fluctuations, and the foresight to recognize and seize opportunities. Buffett's story from his early years isn't just about money, it's about the relentless pursuit of knowledge and the unwavering commitment to his principles, elements that are indispensable in the journey to financial greatness. If you are enjoying the video, hit the subscribe button and comment if you know any other story about Buffett. If you want to explore money-making strategies, click the link in the description to start the financial journey. Building Buffett Associates, a bold leap. As we delve deeper into Warren Buffett's journey to his first million, we encounter a pivotal chapter: the creation of Buffett Associates. This move wasn't just a step, it was a bold leap into the world of serious investing, a leap that would ultimately carve his name into the annals of financial history. Picture a young Buffett in 1956. He's already experienced the ebb and flow of the market, savored the fruits of patient investing, and soaked in the wisdom of his mentor, Benjamin Graham. Armed with $100, Buffett launched Buffett Associates Limited in Omaha. This wasn't about flash or grandeur. It was a modest startup with profound vision. It marked Buffett's transition from an astute investor to a strategic fund manager. What set Buffett Associates apart wasn't just the investments, but Buffett's unique approach. He scoured for undervalued companies with potential for long-term growth, a strategy akin to finding diamonds in the rough. These cigar-butt investments were companies that were undervalued by the markets but had solid fundamentals. Buffett's genius lay in his ability to see beyond the market's noise, to find value where others saw waste. Consider his investment in Geico. At the time, Geico was a struggling insurance company, overlooked by most investors. Buffett, however, recognized its potential and invested a significant portion of his partnership's funds into it. This wasn't a gamble but a calculated risk, grounded in thorough research and analysis. The payoff, Geico became one of the most profitable investments for Buffett, laying the foundation for the future Berkshire Hathaway empire. By 1960, Buffett's partnerships were thriving. His initial $100 investment had ballooned, and more importantly, his investors were reaping handsome rewards. Buffett's success wasn't just in picking the right stocks, it was in cultivating trust and delivering consistent results to his partners. Buffett Associates was more than an investment partnership, it was a testament to Buffett's investment philosophy: patient capital, value investing, and a long-term perspective. It was these principles that guided his decisions, principles that would become the cornerstone of his future successes. In essence, the creation and growth of Buffett Associates was a crucial period in Buffett's journey. He showcased his skill not only as an investor, but as a leader who could inspire confidence and deliver results. This period was a masterclass in strategic investing, patience, and the art of recognizing and capitalizing on undervalued assets. Buffett's journey with Buffett Associates is a powerful reminder that in the world of investing, it's not just about the capital you start with, but the vision you have and the strategies you employ to grow that capital. The $1 million milestone, triumph of patience and foresight. In the captivating narrative of Warren Buffett's financial ascent, the moment he achieved his first million stands as a testament to patience and foresight. By 1961, Buffett had not merely reached a monetary milestone, he had demonstrated a profound understanding of investment that would define his legacy. This journey to this $1 million landmark was neither rapid nor accidental. It was the combination of years of disciplined, strategic investments grounded in an unshakable belief in value investing. Buffett's approach was never about chasing short-term gains or speculating on market trends. Instead, he focused on companies with enduring value, those with solid fundamentals that were undervalued by the market. Consider his earlier investment in American Express. In the early 1960s, the company was embroiled in the infamous Salad Oil scandal, which drastically dropped its stock prices. While most investors fled, Buffett saw a golden opportunity. He recognized that the company's fundamental business was sound and that the scandal was a temporary setback. His decision to invest heavily in American Express at this time was bold but calculated. The investment paid off handsomely as the company recovered, reaffirming Buffett's belief in the principle of value over market sentiment. This milestone was also a reflection of Buffett's extraordinary patience. He wasn't swayed by market volatility or the lure of quick profits. Instead, he adhered to a long-term approach, often holding onto his investments for years, even decades. His patience was not just passive waiting, it was an active, strategic component of his investment philosophy. Buffett's journey to his first million is also a story of learning and adaptation. His early investment style, heavily influenced by Benjamin Graham, evolved over time as he incorporated lessons from his own experiences and observations. He adapted his strategies, continuously refining them, but always stayed true to his core principles of investing in undervalued companies and focusing on long-term gains. The achievement of this million-dollar milestone by Buffett was more than just a financial victory. It was a validation of a set of principles and a style of investing that would eventually make him one of the most successful investors in history. It underscores the importance of understanding the intrinsic value of investments, the power of patience, and the necessity of staying true to one's investment philosophy, regardless of market fluctuations. In conclusion, Warren Buffett's journey to his first million is a masterclass in investment. It teaches us that building wealth is not about the quest of quick riches. It's about the disciplined pursuit of well thought out investment strategies, patience, and the ability to see value where others don't. It's a journey that inspires not just for the financial milestones achieved, but for the wisdom and foresight that marked its path. If you like this type of content, then press the like button and subscribe to our channel.